Have you ever pondered on the question, where should I invest my money, stocks or cryptocurrencies? You're not alone. It's a question that has been on the minds of many, especially in recent years. Investing is a world filled with opportunities, risks, and enigmatic choices. Today we're going to delve into two of the most prominent investment avenues, stocks and cryptocurrencies. Stocks, the classic investment vehicle, represent ownership in a company and a claim on part of that company's assets and earnings. On the other hand, cryptocurrencies, the new kids on the block, are decentralized digital assets that use cryptography for security. These two forms of investments, while both offering potential for high returns, come with their unique sets of risks and rewards. Both stocks and cryptocurrencies have their pros and cons, but understanding them is the key to making an informed decision. First, we delve into the realm of stocks. Imagine the stock market as a bustling marketplace, a global network where transactions involving millions of shares of stocks happen daily. But what are stocks, really? Picture a pie. Each slice of that pie represents a piece of ownership in a company. When you buy a stock, you're purchasing a slice of that pie, making you a part owner or a shareholder in that company. Now, why would companies slice up their pie and sell it? Well, companies issue stocks to raise capital. They need funds for various reasons like expanding their business, launching new products, or paying off debts. And in return for your investment, you get a share in their future earnings and assets. So how do stocks work? Let's say you've bought a slice of that pie. As the company prospers, the size and value of your slice increase. You profit when you sell your stocks at a higher price than what you paid for. But it's not just about buying low and selling high. Some companies also pay dividends, a portion of their earnings distributed to shareholders. But why do people invest in stocks? The main reason is to grow their money. Over the long term, investing in stocks has been one of the most effective ways to build wealth. Another reason is to achieve financial goals. Whether it's buying a house, funding a child's education, or planning for retirement, investing in stocks can help reach these goals faster. Now, it's important to remember that the stock market is not a one-way street to riches. Like any investment, stocks come with risks. The value of stocks can go down as well as up. Companies can underperform or even go bankrupt. So it's crucial to research and understand the companies you're investing in. While stocks offer a level of security and stability, they can also carry risks and uncertainties. Now, we venture into the enigmatic world of cryptocurrencies. Cryptocurrencies are a bit like the Wild West of the financial world, new, uncharted, and brimming with potential. At their core, cryptocurrencies are digital or virtual currencies that use cryptography for security. This makes them incredibly secure and difficult to counterfeit. Bitcoin, the pioneer and most well-known of these digital currencies, was created in 2009 by an unknown person using the pseudonym Satoshi Nakamoto. But how do cryptocurrencies work? Well, most of them are based on blockchain technology. A blockchain is a decentralized ledger of all transactions that is maintained by a network of computers, or nodes. These nodes validate and record transactions in blocks. Once a block is filled with transactions, a new block is formed. This interconnected string of blocks forms a blockchain. So, why are people increasingly investing in cryptocurrencies? There are a few reasons. Firstly, the digital nature of cryptocurrencies makes them easily accessible to anyone with an internet connection, breaking down traditional barriers to investing. Secondly, cryptocurrencies have the potential for high returns. For instance, if you had invested just $100 in Bitcoin in 2010, it would be worth millions today. But it's not all sunshine and rainbows in the world of cryptocurrencies. They are highly volatile, meaning their value can fluctuate wildly in a very short time. This volatility can lead to substantial gains, but also significant losses. Additionally, while the decentralized nature of cryptocurrencies is a draw for some, it also means there is no centralized authority to oversee transactions or to step in if things go awry. Remember, like any investment, cryptocurrencies should be approached with caution. Conduct thorough research, understand the risks involved, and never invest more than you can afford to lose. Cryptocurrencies, while promising high returns, come with their own set of challenges and risks. Now that we have a basic understanding of both stocks and cryptocurrencies, it's time to compare them. When it comes to investing, stocks and cryptocurrencies offer two very distinct paths. Stocks represent a claim on part of a company's earnings and assets, while cryptocurrencies are digital assets that use cryptography for security. They're different beasts, each with their own set of rules and risks. Let's start with potential returns. Historically, the stock market has provided substantial returns over the long term. However, the key phrase here is long term. Stocks can be volatile in the short term, and patience is often required to see a significant return on investment. On the other hand, the world of cryptocurrency can offer jaw-dropping returns in a relatively short period. But remember, with great potential reward comes great risk. Which brings us to our next point: risk. Investing in stocks carries its own set of risks. A company could underperform, or the market could take a downturn. However, these risks are generally well understood and can be mitigated through diversification and research. Cryptocurrencies, on the other hand, are notorious for their volatility. Price swings of 20, 30, even 50% in a single day are not unheard of. This means you could make a fortune or lose your shirt in a very short period. Now let's talk about the level of knowledge and understanding required. Investing in stocks requires a solid understanding of financial statements, market trends, and company performance. It's a field where doing your homework really pays off. Cryptocurrencies, however, operate in a realm that combines finance, technology, and cryptography. Understanding the nuances of blockchain technology, how transactions are validated, and the implications of different cryptographic algorithms can be a steep learning curve. Both stocks and cryptocurrencies can be influenced by global events, but in different ways. Stocks are often tied to the performance of a specific company or industry, and can be affected by everything from earnings reports to executive scandals. Cryptocurrencies, meanwhile, can be influenced by factors such as regulatory news, technological developments, or shifts in investor sentiment. When it comes to accessibility, stocks have been around for centuries and are traded on numerous exchanges around the world. Cryptocurrencies, while growing in popularity, are still a relatively new asset class and may not be accepted or understood by traditional financial institutions. In conclusion, the choice between investing in stocks or cryptocurrencies isn't a simple one. It depends on your financial goals, your understanding of each asset class, and your tolerance for risk. Stocks offer a tried-and-true path for long-term wealth creation, while cryptocurrencies offer the allure of quick, potentially massive gains, but with a correspondingly higher level of risk. Both stocks and cryptocurrencies have their unique advantages and disadvantages, and the choice between the two often boils down to individual preferences, risk tolerance, and investment goals. Let's sum up what we've learned today. Our journey through the world of investing has taken us from the well-trodden paths of stocks to the exhilarating frontier of cryptocurrencies. We started by exploring the basics of stocks, those shares of ownership in a company that have been the cornerstone of investing for centuries. Stocks offer a way to grow wealth over time and can provide a steady income through dividends, but they also come with risks. The value of a stock can rise and fall based on a company's performance and market conditions. Then we ventured into the realm of cryptocurrencies, those digital or virtual currencies that use cryptography for security. Cryptocurrencies offer the potential for significant gains, with their value often driven by supply and demand dynamics. However, they're also marked by volatility and uncertainty, and their regulatory landscape is still evolving. Comparing stocks and cryptocurrencies, we noted that while they both offer opportunities for profit, they come with different risk profiles and require different investment strategies. Stocks are generally considered a safer bet for long-term growth, while cryptocurrencies can offer higher returns, but at a higher risk. But regardless of whether you're investing in stocks or cryptocurrencies, one thing remains clear: the importance of doing thorough research and understanding the risks before making an investment. It's crucial to stay informed about the companies or technologies you're investing in, the broader market trends, and your own financial goals and risk tolerance. Investing isn't about chasing the latest trend or making quick profits. It's about building wealth over time through careful and informed decision-making. Whether you're buying stocks of a well-established company or investing in a promising cryptocurrency, you're taking a stake in the future. Remember, successful investing is not about making the perfect decision, but rather about making informed and thoughtful decisions. Thanks for watching. Be sure to like, comment, and subscribe. And hit the bell notification so you'll get updates anytime we upload a new video.